Ladies and gentlemen, good day and welcome to Laurus Labs Limited Q1 FY25 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Munish Shah from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Seema. Good evening, everyone, and welcome to Laurus Labs Q1 FY25 earnings conference call. Today we have with us Dr. Satyanarayana Chava, Founder and CEO, Mr. V.V. Ravi Kumar, Executive Director and CFO, and Vivek from the IR team. On behalf of Antique Stock Broking, I thank the Laurus management for giving us the opportunity to host this call. I would now like to hand the call over to Dr. Satya for his opening remarks. Thank you, and over to you, sir.
Thank you, Manish, for your introduction. Thank you all for joining us on our Q1 FY25 results conference call. We are pleased to have this opportunity to update you on our progress and answer your questions. As we continue to grow and innovate, we are embarking on Laurus' most significant rebrand initiative in a decade, making the start of our new journey towards expanded horizon. Our new tagline, Chemistry for Better Living, reflects our dedication and purpose in leveraging scientific innovation and chemistry to enhance the quality of life for people around the globe. And I'm confident that the new identity will reinforce our global positioning as a provider of manufacturing as a service in the pharmaceutical and biotechnology landscape. We have begun our FY25 on a positive note, sustaining momentum in our key CDMO clinical projects and demonstrating resilience in our financial health. We are leveraging power of our wider and sustainable technology platforms and commercial excellence to advance our partners' pipeline projects and maximizing the impact of our robust integrated model in delivering long-term stakeholder value. We are currently engaged in delivering multiple RFPs involving multi-step complex chemistry, large-scale biocatalysis using in-house manufactured enzymes for our partners' clinical programs. I would say we have important and large opportunities ahead of us, and we are highly focused on realizing them starting second half of this financial year. We have invested significantly towards expanding our development and manufacturing capabilities over the last few years. And this has been painful because of significant deleverage. But we believe this will be very rewarding and will significantly support another transition at Laurus of converting from highly generic focused into a well-respected and diversified CMO-focused company. Our commitment to disruptive technology in cell and gene therapy space continued to do well, especially enabling broader access to innovative cell therapy product NexCAR19 for patients in need. In gene therapy, we are actively progressing on the construction of GMP lab with focus on manufacturing GMP viral vectors and gene therapy products. Moving on to our financial results, our Q1 results demonstrated continued strong resilience in financial health, reflecting robust business quality across divisions despite pricing pressure in generic APIs. I would also say that Q1 has been largely on expected lines as we prioritized a lot of resources towards delivering several clinical phase complex projects. The performance is expected to pick up through second half. For the quarter, we delivered a flattish revenue growth of 1% and achieved a revenues of 1195 crores. Strong growth in oncology APIs and firm demand in ARV portfolio was offset by slightly sluggish performance in CDMO division. Gross margins were strong and maintained above 50% range, while EBITDA margins remained subdued at 14% due to lower asset utilization and dilution from investments in growth projects and new initiatives. I would like to share key updates on various business divisions. In the CDMO division, we continued operational commercial improvements and recorded a sales of 214 crores. Revenue is on expected lines, driven by significant resource allocation to various clinical phase deliveries. This also reflects growing customer confidence in our wider technology platform and capabilities like hydrogenation, flow chemistry, biocatalysis, and large commercial capacity. For the full year, we remain committed to a healthy growth outlook, which is supported by scheduled project deliveries for key late-phase NCE projects in the Q4 of this financial year. Momentum in RFP continued from big pharma and large biotechs, and we are also increasing our business development efforts towards securing early-stage projects to widen the project pipeline. As mentioned earlier, we are working on over 70 active projects, ongoing commercial supplies for about 10 products, including APIs, as well as several advanced intermediates. Key CDMO focused growth projects is progressing in line with plan. Animal health facility under early ramp-up phase. Commercial validations are going on. Crop production ingredients facility qualification target by end of FY25. R&D center commissioned in the next month, which will further expand our R&D capabilities to support new business opportunities. Our focus continues on leveraging significant scientific overlaps and build diversified revenue stream from customers. In the generic API division, revenues from this division are at 664 crores with a 10% growth, supported from strong oncology delivery and firm demand in ARV volumes and growth in other APIs. ARV APIs retained volume-led strategy.
Ladies and gentlemen, thank you for patiently holding. We have got the line for the management reconnected. So please go ahead.
Thank you. Sorry for the disconnect of the line. I'll continue giving the progress on our generic APIs, especially the ARV APIs. Our ARV APIs has retained its volume-led steady momentum and reported revenues of 400 crores. The current order book for our product basket looks encouraging, supported by additional supply contracts secured through successful tender wins by our customers. We continue to maintain a leading market share in the first-line HIV treatment. Oncology APIs reported a Q1 sales of 120 crores, 120% growth year-on-year. We have completed validation of new oncology products at our Vizag site with increased batch sizes and currently waiting for regulatory approval for our customers. We believe our portfolio breadth and capacities, along with ongoing positive market dynamics, would continue to support additional volumes in this division on an annual basis. Other API segments, which includes cardiovascular, diabetes, and asthma, we reported sales of 144 crores, growing 6% year-on-year. Sequentially, sales declined by 24%, mainly due to timing of some CMO contract delivery schedules. We are working towards expanding CMO engagements and remain committed to long-term growth with a clear focus on cost leadership in select high-value APIs. During the Q1, we filed 3 DMFs, all in non-ARV category. With this, a total number of DMFs filed to date is 86. In the generic formulation space, we reported overall revenues of 274 crores for Q1, decreasing 4% over last year. On sequential basis, revenues decreased by 1/3, mainly impacted by global agencies' buying pattern in ARV formulations. Strategic JV with Karka has been incorporated and progressing well. Over the medium term, JV focus will continue on delivering synergies and enhancing product portfolio. Meanwhile, to meet the near-term needs of our partner, we have extended our existing CMO collaboration to include additional oral solid dosage manufacturing lines at our existing Vizag site. These expanded lines to go on stream in the next 18 months. Coming to LMIC business, overall market volumes have largely remained stable, partly supported from stable pricing trend over the last 2-3 quarters. We continue to pursue optimization program to counter any pricing impact. We believe the impact in ARV franchisee are broadly stabilized and are expected to stay in this stage. Coming to the developed market, we continue to perform well across our broader portfolio despite higher competitive intensity. During the Q1, we filed 1 dossier in US and obtained 4 final approvals, 3 in US, 1 in Europe. In US, while the price pressure had continued, we are working towards increasing the volume share on select products. Also, we expect to see the benefit from recent ANDA approvals in the next couple of quarters, supporting our anticipated full year utilization pickup. Cumulatively, we have a total of 41 ANDAs filed today. Of this, we obtained 21 final approvals and 14 tentative approvals so far. We continue to have diverse portfolio and pipeline, including products franchisee comprising of ARV, cardiovascular, diabetes, CNS, and gastro. We have a total of 62 products in the R&D pipeline, either under review or under development, having a significant addressable market value. On the R&D front, overall R&D spending to sales for Q1 FY25 was at 5.4%, increased by 35% year-on-year. Higher R&D spend is in line to enhance our pipeline and includes spends towards additional initiatives in cell and gene therapy assets. We continue to invest in portfolio with product-specific approach based on complexity and scale economics. In the bio division, we reported a sales of 43 crores. Sequentially, sales have recovered strongly due to customer orders. The growth was led by diversifying application of our CDMO services. We've initiated discussion with several strategic customers for long-term collaborations. We continue to grow our enzyme engineering and production for small molecule, clinical and commercial projects, which will augment our pipeline using green chemistry for sustainable manufacturing. Our plan to build larger fermentation capacity in Vizag has broken ground, and we're accelerating efforts based on availability of support services like ETP and other services. And we also wanted to utilize this facility for GMP pharmaceutical manufacturing. We expect this facility to be commissioned by June 2026. Let me share brief on our quality side as well. In Q1, the company underwent 32 quality audits by multiple drug regulatory agencies and several customers. Company has successfully passed audit inspections without any critical findings. This includes successful US FDA inspection of our 2 large API manufacturing facilities, Unit 1 and Unit 3 in Paravada, Vizag, which has recently received EIR. In summary, our R&D-led commercial strategy is delivering on compelling growth projects. My confidence is strong and also growing that we are taking right steps to best position the company for value creation this year and take the company well into the future. With that, I would like to hand it over to Ravi to share financial highlights.
Thank you, Dr. Satya, and very warm welcome to everyone for our first quarter of FY25 earnings. Total income from operations 1195 crores against 1192 crores year-on-year. It is a flattish. As Dr. Satya explained, Q1 is largely on expected lines as a lot of resources are prioritized towards delivering several clinical phase projects, and the performance is expected to pick up mostly from H2. This was we already indicated in our previous call. Supported by on-hand orders for the project deliveries. Gross margin maintained at healthy level at 55%. This is due to product mix and some of the cost savings what we achieved in the raw material price negotiation. Our EBITDA for quarter one is at 171 crores at 14.3% is in line with the previous year quarter on quarter. But we expect improvement in the second half. Our diluted EPS for quarter one is at 0.23. Our ROCE was at 6%. Of course, because of the lower revenue and lower profitability, these ratios may not be looks comparable. On the capex front, we invested close to 125 crore in this quarter, and our net debt stood at 2,633 crores. And going ahead, we remain committed to delivering on our FY25 growth outlook, and we will prioritize investment into high-value business segment to drive medium and long-term growth. Besides, the focus will also continue to improve on our working capital efficiency. You can refer our IR presentation for more details. If anything additional information you need, please contact our IR. We will provide. With this, I would request moderator to open the lines for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Sajal Kapoor, an individual investor. Please go ahead.
Yeah, thank you for taking my questions. Hello, Dr. Satya. In one of the slides, I mean, there was no slide number, so I can't refer to the slide number because there wasn't any. But it's one of those slides. It was mentioned that out of the 28 customer audits conducted in Q1, how many were CDMO client audits out of these 28 that happened in Q1? And what are these customers looking for? I mean, what draws them to Laurus when there are so many other CDMO companies in India? Thank you.
Thanks, Sajal, for asking that question. I would say at least half of the audits are done by CDMO customers. Some of them are periodic audits because they have to do audits in a stipulated time frame, and some of them from new customers which we are onboarding.
And is the intensity increasing? So what was the number, let's say 2 years ago versus today? I mean, do you see an increase in customer visits, customer audits, above and beyond the RFQ? So I know you mentioned RFQ are coming, but are customers actually traveling to India and physically seeing the facilities and the infrastructure?
I think there is a significant increase in visits, followed by the quality audits, followed by safety audits, and then they roll out the RFPs. So to get an RFP, we have to go through a long process. See, no big pharma, no NCE customers would like to give an RFP and a project without their commercial team visiting, without their quality team visiting, without their EHS team visiting. They can give a preclinical projects, but when we are talking about late-stage clinical programs, I think their audits are sometimes multiple days, sometimes involving multiple facilities also.
Yeah, understood. And on the Laurus Bio slide, it's mentioned that initiated discussions with several strategic customers for longer-term CDMO collaboration. And question really is, why are customers interested in Laurus Bio given that R2 is fully booked and new capacity will only come online when R3 goes commercial? So when there is no capacity available, how can we engage in discussions 3 years in advance? Because R3 going commercial, I think, is give or take 3 years away, right?
Is 24 months away. We are also building fermentation capacity at Vizag also, which will come little earlier to R3. And the long-term contracts, our customers who are willing to sign long-term contracts are visiting right now because they are running their projects currently at R2. It's not that we are bringing a new customer for R3. Actually, the customers who are using R2 for pilot scale of their programs are talking to us for the large scale manufacturing in R3.
Right. You mentioned Vizag fermentation, but that's a GMP fermentation and that's under Laurus Generics, if I'm not mistaken. That's not under Laurus Bio, correct?
No, it is not Laurus Bio. So there are two programs initiated when compared to the last two quarters and right now. Because of the higher demand of GMP intermediate manufacturing in our generic products and also some enzymes which needs GMP manufacturing will be anything related to GMP manufacturing and which involves organic solvents usage after fermentation, those will be done at Vizag. And the fermentation which doesn't involve any GMP steps, doesn't involve any use of organic solvents will be done at R3. I think that is a very easy answer. Why we are keeping R3 under Bio umbrella and another facility under Laurus umbrella. So we want to segregate GMP manufacturing and non-GMP manufacturing.
No, understood. And lastly, very quickly, on the OPEX side, during the AGM that was conducted few weeks back, you mentioned that today 80% of the scientists are on the CDMO side as compared to only 20% few years ago. And if I look at our scientific count, so 2019 we had about 200 scientists in the synthesis division or the CDMO division, versus today we have no less than 800, give or take. And so that's a fourfold jump in 5 years. And now we have got this new Genome Valley Center coming up, which will add to our OPEX fixed cost further. So it's kind of nearly fivefold jump in our scientists on the CDMO side, which is giving a significant high OPEX fixed cost, right? I mean, you mentioned H2 is when we see the benefits emerging. How confident are we that we are not misallocating capital or we are overestimating the demand coming on these CDMO services? I mean, is the customers giving us enough assurance that gives us the confidence to increase, fivefold increase in the customer, in the scientists on the CDMO side?
This is a very great question, Rajulji. So, as you mentioned, a lot of resources are being allocated currently for late-stage projects for big pharma. So, if you are putting resources on a phase 1 molecule with 30 steps and it will take 100 scientists, the outcome may be questionable. But currently, we are taking very minimum early-stage projects so that we don't put resources on a projects with uncertainty associated with that. So most of the resources are happening in projects with big pharma, with oncology. Some of the projects in oncology, some of the projects in rare diseases with high dosages. Our expanded R&D capabilities will augment our ability to take early clinical projects. As you mentioned in your investor presentation, we want to not to neglect increasing the funnel by taking more early stage projects.
Sajjalji, actually, we have not increased 5-time resources. So the resources, I think, if I'm not wrong, maybe 25% to 30%. But what Dr. Satya said is reallocating from
Generics to synthesis. That's what he's asking.
Yeah. So, and then question of additional OpEx because of the new R&D, yes, it will be done, but it's like your productivity also will improve.
Yeah, sure. And
Sorry to interrupt you, Mr. Kapoor. May we ask you to rejoin the question queue, sir? We have several participants waiting for their turn.
Okay.
Thank you. We take the next question from the line of Mr. Tushar from Motilal Oswal Financial Services. Please go ahead, sir.
Yeah, thanks for the opportunity. Am I audible?
Yeah, you're audible, Tushar.
Yeah. Sir, firstly, how much was the ARV sales for the quarter?
About ARV APIs around 400 crores and formulations
552 overall. 552.
552 crores. Yeah.
Overall 552, huh?
Yeah.
And so this reduction in the ARV, so basically trying to understand the jump in the gross margin when the custom synthesis sales has been lower and even the formulation sales has been lower on an overall basis. If you could explain the sharp jump in the gross margin and sustainable gross margin.
Sure. See, the gross margin improvement is based on one is the product mix. We have a significant increase in our oncology sales, and also the gross margin in APIs also increased because of the favorable pricing mechanism from ARV API RMs, and also the process improvements done in some of the key large volume APIs. These three factors led to the improvement in the gross margins.
Oncology, the proportion has been largely stable as a percentage of sales, may it be in fourth quarter or even in, let's say, the earlier quarters as well.
Yeah, the significant impact came from raw material cost, reduction in the overall large volume APIs, supported by the process improvements. What we have done in the previous quarters also came in the Q1.
Got it. So secondly, on this long-term CMO agreement which is signed in FDA, so two questions to this. How much capex will this be required while this would be funded by the customer? And this is for a patented product or a generic product?
This additional CMO contract we are signing is to give additional manufacturing lines in our oral solid dosage form facility in Unit 2 for our partner. So currently we do about 2 billion tablets contract manufacturing there, and our partner is asking for additional capacity. So we are adding several lines, and we will give additional 3 billion tablet capacity over a period of time. And most of the capex will be funded in the sense they will give advance and we will install that capacity. Yeah.
But would this be for again the generic product or for a patented product?
Mostly this CMO contract is generic formulations. Yeah.
Got it, sir. And lastly, on this fermentation facility at Vizag, how much investment would be there and over what period of time?
We expect about 200 crores investment into Vizag, and we expect it to be ready by mid of 2026.
All right, sir. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Mr. Balaji Boina from Kotak Securities. Please go ahead, sir. Sir, Mr. Balaji, your line is in the talk mode, sir. Please go ahead with your question. As there is no response, we move on to the next question from the line of Krish Mehta from Enam Holdings. Please go ahead.
Thank you for taking my question. My first question was on the leverage in terms of net debt to EBITDA. So as our capacity utilization will increase gradually over the next year or 2 years, how do you see this ratio settling in terms of it being 3.3 and slightly elevated at the moment, but how do you look at it on a steady state basis?
Krish, actually, can you just speak a little louder and can you repeat your question, please?
Yeah, am I audible?
Yes,
I'm sorry to interrupt you. Mr. Mehta, are you connected on your earphone?
Yes. Am I audible?
Yes. May I request you to please switch to your handset because your voice is echoing.
Hello?
Yeah, go ahead.
Yeah. Sorry, I just wanted to ask on the leverage ratio in terms of the net debt to EBITDA being elevated at 3.3 times. So as our capacity utilization increases gradually, how do you see this settling?
I think the net debt by EBITDA is because of the lower EBITDA. I think as we indicated, for a full year basis, actually we will be definitely improving. As we indicated before, we are targeting to make it less than 2.5 by end of March 25.
Okay, that's helpful. And I wanted to ask a second question on the mix in terms of the ARV and non-ARV. So given that in Q4 and Q3 of last year we were around 50% and it's gradually come off a bit, how do you see this mix if you look at, say, from a 1 to 3 year basis going forward?
I think, as we mentioned in previous calls, the overall ARV franchisee will remain, give or take, 100 crores, around 2,400 crores, 2,500 crores. That's the range we expect, despite of how much effort we put. Because we don't want to invest more in ARVs, APIs, because most of the investment going in other areas. So, even in Q1, you might have seen our ARV contributed 550 crores out of 1,200 crores. So 650 crores came from other APIs, other businesses. So as we grow in other businesses, especially what we are saying, our animal health facility is going on stream, our crop science ingredients facility going on stream next year. Most of the clinical programs, late stage, we deliver second half of this year, and the commercials kick in next financial year. So gradually, we expect the revenue contribution coming from ARV, APIs and formulations. The quantum will remain same, but the percentage will significantly come down over a period of time. We don't want to comment the percentage, then you can gauge what is our top line. So we want to leave that space open. Yeah.
Okay, thank you so much.
Thank you, sir. The next question is from the line of Jeevan Patwa from Sahasrar Capital. Please go ahead, sir.
Yes, sir. So, first question is on the one of the slide where we mentioned that we have done some 2,600 crore capex. So, out of that 2,600 crore capex, how much is currently being utilized? How much is not being utilized?
Mr. Jeevan Patwa, what is happening in the current capacity utilization which we have built for CDMO projects?
Right.
We are not utilizing full capacity. Suppose we are doing 20 chemical steps in a project. We cannot do all 20 steps at a time because the project is not commercial. We do step 1, step 2, step 3, step 4. So the facility which we do this complex chemistry, maybe if you see the reactor operation, it could be between 10-20%, no more. But the facility looks like fully occupied, but the actual utilization will be very, very marginal. So, going back to the question, this 2,600 crores investment, about 3/4 of that is done for CDMO. Yeah.
Okay. Got it, sir. And second part is, So we are actually saying last 2 years that FY25 is the year one should be watching out for. But the first quarter actually doesn't look like, the quarter. So even last quarter we said that all bad quarters are behind, right? But Q1 is again, I don't think it's a good quarter again. So any color on this? Are we still think that FY25 will be the big year, or you think 26 will be the big year now?
Jivanji, we said our H2 will be better. Actually, we have indicated H1 will not be that great, and H2 will be definitely better. That's what we indicated. And frankly speaking, this quarter one is in line with our internal guidance. So we are in line with the thing, and FY25 definitely will be a good year. But we indicated FY26 will be the much better year because some of the assets which we invested, like animal health, etc., will started yielding results.
Sure, sir. And we have done a lot of work on the CDMO side. So we talked about a lot of processes that we have developed, biocatalysis, continuous flow chemistry and all that. And we are talking to a lot of big clients since last few quarters. So anything any color on, any large contracts or anything which is under negotiation, in the last stages or final stages, do you see any? So how do you see that? So,
what we can say, we have utilized our biocatalysis expertise, and we are making enzymes and using in the late stage chemical programs. That's the one good thing. And second, when we are saying continuous flow chemistry, we have delivered registration batches for an API. I would say we have completed registration batches for an API. Deliveries will happen this quarter using continuous flow chemistry. So we are demonstrating our capabilities, which are going into the registration files of our partner products. Large-scale biocatalysis, large-scale continuous chromatography, large-scale continuous manufacturing. These are going into our partner products. And we are also adding continuous manufacturing in hydrogenation also. We are expanding our capabilities. These will go into the files once they get approval, and then the commercials will kick in. Yeah.
Great. That's it, sir. Thanks a lot.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants. If you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Bharat from Quest for Value. Please go ahead, sir.
Yeah, thanks for giving the opportunity. Sir, in annual report, I see that there are 17 Para 4 and 11 FTF opportunities. May I know when can we expect the revenue from these Para 4 and FTF?
It will come from FY20. The major will come in FY29, not before.
Okay, better. And this question is more on the macro level. I want to know your opinion on this Biosecure Act in US. Do you see supply chains shifting away from China for the innovator CDMO? And may know which country will benefit most from this shift? And do you see any supply chains shifting to India?
I think because of the Biosecure Act, people will diversify their supplier base, that's for sure. And India is likely to get benefited from this. And it is not going to be a knee-jerk reaction. Nobody is going to shift in 2 months. So they will take its own time. They visit, they audit, and they give a small project, and then increase the collaboration over a period of time. I think in the long run it will benefit, but in the short run, it is not going to happen in a quarter, in 2 quarters. It will take its own time. Yeah. But in the long run, it is a definite good step towards the CDMO opportunities for Indian companies.
Okay, thank you. And sir, you guided that the ARVs in total would be around 2,500 crores, and for FY25 also the guided margin was around 20% EBITDA. Are you still confident of achieving these two guidance, sir?
Yes. Yeah. Broadly, yes. Yeah.
Okay. And regarding the new capex in FDF that is funded by customer, I just want some clarity on this one. So are you going to expand Unit 2 from 10 to 15 billion, or is it in Unit 2, 10 billion itself, so you are giving some allocation to this new customer?
We plan to expand. The current 10 billion is not enough for our products and the partner products. So partners need certain type of equipment, certain type of technologies. So we'll buying partner-specific equipment and installing. That is an expansion. So in 18 months, our capacity at Unit 2 is going to be 13 billion tablets, not 10.
Okay. So 3 billion for this new customer and 3 billion for joint venture with Jakarta, and the rest would be used for ARVs and our general things, right? Okay. Okay then. Yeah. Thank you very much, sir. Thank you.
Thank you. We take the next question from the line of Rishabh Gang from Sacheti Family Office. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
It will be good if you can speak a little louder.
All right. So, I wanted to understand, in the annual report, it mentions that there would be pricing headwinds in some parts of the API portfolio. So, need some light on the reasons for this and how long will this continue? Further, how much impact on margin this will cause?
Sorry, we are unable to hear clearly. Are you using a headset?
I'm using my headset only. Am I audible now?
Sir, you'll have to switch to your handset, sir.
Yeah, headset only.
Not the headset, sir, your phone. Could you please take off your earphones and speak through your handset?
Yeah, sure. Am I audible now?
Yeah, better.
Yeah. So, my question is that in the annual report mentions that there will be pricing headwinds in some API portfolio. So, need some light on the reasons for this and how long will this continue? First question. Second, further, how much impact on margins this will cause, and how much of this pricing impact company expects to be moderated by cost improvement measures and increase in CDMO and biotech business?
As you have seen, our quality of business is very good, as we demonstrated gross margins around 50% consistently. Despite price of APIs going down, we were able to maintain the gross margin, because if you look at our last few quarters, the growth in CDMO revenue is not big, but we were able to maintain the margins at healthy 50% or above. That was primarily because of our sourcing benefits coming from the softer RM prices and higher opportunities and higher process improvement benefits coming from our R&D efforts. These two are the main reasons we were able to offset the price headwinds in the APIs.
All right. Also, I understand, what are your any guidance in 4 to 5 years?
I'm sorry, we are not giving guidance, but we are saying, as you mentioned, we are confident that the performance will certainly improve from H2, and we are very confident on delivering some interesting and large CDMO opportunities.
All right. Any outlook on agro side?
Agro, no revenues will come this year, so the facility will be commissioned only by end of this financial year.
All right. All right. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Mr. Smith from RDA. Please go ahead.
Yeah. Thank you for the opportunity. As I can see, we received patent for Iva Castor. Are we pursuing opportunity in API market or formulation market?
We have several patents, but that doesn't mean all patents will pursue for commercial opportunity. Yeah.
Okay, but anything, I mean, what is the market, I mean, addressable market and something like it?
No, we cannot give product-specific guidances.
Okay.
Thank you, sir. We take the next question from the line of Madhav from Fidelity. Please go ahead.
Hi, good evening. Thank you so much for your time. When you speak about the CDMO or the NCE commercial CDMO launches in quarter 4 or second half of this year, does that mean that the product sort of moves through the R&D pipeline for the customer via Laurus, and now it's kind of commercializing for the customer with a new launch? Is that how we should look at that opportunity?
No. We are not delivering commercial quantities. We are delivering projects for their registration purposes. Okay. Yeah.
So this is basically after phase 3, but before actual launch?
After phase 3. Yeah.
Okay. So if this basically, the registration batch succeeds, then FY26 we see commercial volumes coming in for that particular product. Is that how we should look at it?
Hopefully. We also expect the same. So the chances of success of these programs generally very high because these are in the registration pages. So we expect for complex molecules, their supply chain also needs lot of longer lead times. So hopefully, once we deliver these registration batches, we expect some commercial quantities in next financial year.
And currently, I think, if I understood right from the presentation, we are supplying volumes for...
No, we lost you.
Sir, the line for Mr. Madhav has got disconnected.
Please,
We'll take the next question from the line of Harshal Patil from Mirae Asset Capital Markets. Please go ahead, sir.
Yeah. Good evening, sir. Thank you for the opportunity. So just had one clarification. For the PPTs, if I have to refer to the API PPT slide, there's a comment which says that overall sequential decline due to timing of shipments particularly. So is there any problem that we faced, any logistical issue that we faced, and do you see this more as a transient thing or what?
No, that's not very... we can't give you a specific reason for that. Yeah.
Okay. But is it at least transient in nature?
Yeah.
So we can expect the normalcy to be retained?
Yeah.
Okay. That was there, sir. And secondly, with respect to the CDMO thing, definitely you clarified on the NCE scheduled deliveries. But with respect to the existing supplies, sir, if you could just talk a bit about the traction and what kind of improvement we could expect for FY25.
I think our base of commercial deliveries is give or take 200 crores per quarter. That doesn't include any additional opportunities what we are delivering or what we are committed to deliver and where we have orders on hand. So once we deliver new opportunities, the value will go beyond our regular supplies.
Okay, got that, sir. Got that. And lastly, if I can just squeeze one, probably on the margins where we're seeing that the API prices are getting a bit more softer. So believe that our margin trajectory, as you've guided, would be maintained despite of that?
I think at least gross margin front, all of you might have noticed, last several quarters we were able to maintain around 50% gross margin. So I think that we are very confident to maintain at that level. Yeah. So if you look at from in the presentation second quarter FY23 to first quarter FY25, that means almost 8 quarters. 8 quarters we were able to maintain around 50% gross margin. Yeah.
Great. Yeah.
Thank you. So that was it from my side. All the best.
Yeah.
Thank you. We take the next question from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for taking my question. So on your CapEx plans, given where your various expansion plans are, what kind of CapEx do you envisage for the next 2 years?
Ravi, would you like to answer CapEx for this year and next year?
This year and next year, probably anywhere between 1,800 to 2,000 crores, maybe
Around that, yeah.
2 years together. Yeah.
And Ravi, how would you break that up into broad segments if you can?
Gross net, as I indicate, segment, the addition out of this, I think majority goes to the CDMO and some part goes to the FDF because of this specific requirement from one of the customer.
Sir, on this customer specific requirement where you mentioned presentation, you mentioned that CMO contract should start on F27. How should we think about the potential, size or scale of this business?
I think these are, we know the volumes, we know the products, we know the price. So there are no surprises on either side. So we are putting the capacity because we know how much we are going to make on that. So, it is very stable business. Yeah. We are building that to a generic customer. We know the markets. We know what percentage of market share he is enjoying. So I think that is going to be very stable business for us.
Just on this account, now since you're putting up additional capacity and formulations, this quarter, for example, over the last few quarters, we've had extreme volatility in our ARV supplies to LMIC markets. So the capacities that we have for finished formulations, are they fungible across ARVs and non-ARVs? Or we have to use a certain amount of capacities only for ARVs only?
No. Formulation capacity is very fungible. So we can use it for ARV, non-ARV, diabetes, cardiovascular. There are no challenges. Only the size of the batch determines which line we use.
But is there any reason why? So what proportion of the capacity currently is utilized for ARVs or the formulation side?
ARV, we are making about $100 million sales on average. So why we will allocate capacity of ARV to something else?
Sorry, sir?
He is asking how much percentage.
So how much percentage of capacity we are using for ARV? Maybe
60-70%.
25, formulation wise, maybe 25% capacity is used for ARVs.
25% of that?
Yeah.
Okay. And then lastly, on the CDMO business, you obviously are into multiple negotiations. So what will be the nature of most of the business that comes in? It will be for early stage projects, or do you have also opportunity for certain large supplies starting because you're probably taking on some of the more commercialized products, So what will do we have like the commercial supplies coming through immediately, or you have contracts where you build up the relationship and then supplies happen over a period of time?
The most of the supplies what we mentioned will happen in H2 of this financial year are for registration or phase 3 projects. So the certainty of those moving into the commercial is very high, and we expect some commercial orders will come next financial year.
Okay. Thanks.
Thank you.
Thank you. Yes. We take the next question from the line of Madhav from Fidelity. Please go ahead, sir.
Sorry, my line had dropped. I was just asking that the one molecule which you spoke about when we supplying the registration batch. So if I understood right from the presentation, currently we are supplying 10 commercialized products in the CDMO division. So this one, if it succeeds, it will be the 11th product for us, which is commercialized. Is that how we should understand the business currently?
No. When we said 10 products commercial, those are already in our base sales. And what we mentioned, the new projects, those are over and above what we are supplying commercially. Yeah.
So basically commercial doesn't mean that it's a commercialized molecule for the customer, basically. That's not what you're indicating.
No. 10 products, what we said commercial, those are products commercialized at our customer side also. That's what it is.
Exactly, that's what. Okay. And just the other question was, in the CDMO business, currently, how many of the supplies that we are expected to do in FY25 are for like these registrations, which is, very close to commercialization? Then like 2, 3, if you could give some sense there, and how many are in, late stages basically? Yeah.
Typically, when people file NDA, they expect to launch in 12 months. If there are no red flags raised by the FDA or the agencies, they will launch in 12 months.
Got it. And for the particular project, is Laurus the sole supplier, or it's going to be like...
We are not talking of one project, we are talking multiple projects. And nowadays, with the global supply chain challenges, nobody is going to use only one supplier for any project. I want to be very clear there. Yeah.
Okay. Yeah. Thank you.
Thank you.
Thank you. Ladies and gentlemen, we take that as the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you for joining our conference call for Q1 FY25 and also asking very pertinent and interesting questions. Thank you. Thank you.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.